Hey guys, AKIL'S here. Welcome back to another Weekend Trading Edge video. I've been on the road for the past 4 or 5 days. Just got back in town and I'm a little bit tired. So we're gonna kind of get straight to the point with this video. And I got something very special to share with you at the end. So make sure you pay attention until then. Starting here on the Euro Dollar 4-hour chart, we have a head and shoulders type of pattern forming, or we've had a head and shoulders form and we have a secondary chance at getting involved. You see, recently the market has done this. We've extended up, we've retraced down, we've had a shorter extension up, we've consolidated, creating this head and shoulders pattern. If you watch videos in the past here, you know exactly what that is, but it is a classic reversal pattern in the market if you guys are new. And then what we've done is we've actually violated the head and shoulders, retraced, and then violated the secondary violation, if that's not enough words of violation for you. To make it short and sweet, here's what I mean. The most important part of the head and shoulders pattern is going to be the neckline. That is going to be the lows right here. If I get the right thing going, here we go, the lows right here. If you're doing a slanted neckline up here or right here. Once we break and close beneath those lows, that allows us to make the prediction that price is likely to go lower. And this would be the pullback that we're looking forward to in order to get involved, right? You can see price violated it with this big red candle. We then came back up to retrace that previous violation. And we ended the week with a very good and very positive candlestick combination for the sellers. We got a pin bar right here, this rejection candle. A pin bar is essentially a candle with a very long wick or tail to the upside. In this case, that closes at the bottom, giving us either a strong bearish candle or in this case, a weak bullish candle. And then we followed that up with another lower low, lower close. So another bearish session, giving us a sign that, hey, the bears are likely to continue. The next question we want to ask ourselves is, if we're likely to continue lower, where are we likely to go to? Because there's no point in taking a trade if there's no place to take the trade to. And that's when I'm going to look left, structure leaves clues, and try to find my most recent level of structure looking left. Now, depending on how you analyze the market and depending on your philosophy of the market, this may be in a few places, right? If you are very aggressive in your predictions, you may be looking for or projecting a move down to this next level. I'm having a horrible time of getting my right tools, but this level right here, if you're very aggressive. If you are more conservative, you're probably choosing an inside level that looks something like this. Now, I'm not here to tell you that one is right or one is wrong. Again, it depends on your philosophy of the market. But as I tell our traders over at Tier 1, you just want to make sure you're as consistent as possible when doing this. And that's why it's important to learn how to read a price chart, practice reading a price chart before you get into any of the strategy stuff. But two different levels you can look for price for profits at. A conservative level would be right in here. An aggressive level would be a little bit lower. And of course, you can do anything in between or do a combination of both, where you take a target 1 at the first level, roll stops to break even, and look for a target 2 at the second level. Regardless, certainly something to look for on the euro dollar this week. So next up, we're going to be on the pound yen. We're going to start on the daily chart here just to give you an idea of what has been happening on the pound yen, aka the beast. And if you know anything about how to read a price chart, you should be seeing consolidation on your chart. Remember, if price is moving from bottom left to top right bull trend, top left to bottom right bear trend, side to side, consolidation sideways market, right? So we don't really have a longer term directional bias here. Now, this is something that you can either ignore and skip on to the next asset class, or you could look to be more of a mercenary trader that still looks for trading opportunities, but just not longer term projections. And that's the opportunity I'm going to show you today. So after price came down and retested a recent low right here, we tickled it, boink, and then bounced back up. We actually came back up to a very important area in the market, right? Now, I'm going to break this down into 2 points, right? The bigger important area that we're looking for as far as a resistance zone is going to be right here. Now, the smaller one is going to be in here. The smaller one would be the preferred one for counter trend trading, so those looking to get short. But we are in the bigger one, which does present an opportunity. And what we've done is we've come to that level right here. We moved off of it, and then we've come up to test it again. And as we go down to lower time frames, like the 4-hour, you're going to see that we actually put in a double top at that area. Double top is essentially when price action retests a similar level twice, right? Look at some past videos here on the YouTube channel. We actually did a lesson on one, but this would be test number 1. This would be test number 2. And we actually had a nice close right here. This would be your entry right at the end of this green candle. The red candle hasn't moved much off of it, but right at about 93.31. Now, because we are in consolidation, going back to the daily, right, I have no reason to expect price to go all the way down across the world, right? All the way down, give me that, there we go, down here, not even here. And maybe here would be the riskiest I would be. And you can see there's still a lot of room there, right? This is a move from here all the way down to here. That's about 300 pips. Yeah, we call this pair the beast because it has a big ATR and it is rather beastly. It's like riding a bucking bronco. It can take you for the ride of your life and you can enjoy it, and lots of money can pop out of the Bronco's something when you ride it. I don't know, I'm visualizing that and it just got weird. Or the bucking bronco can throw you off, stomp on you, and kill you. To each his own, right? It all depends on your skill level as a trader. So newer traders, I wouldn't hop in and try to trade this pair. But if you know how to ride, it can take you on some pretty good ones. Anyway, Broncos aside, there's a couple ways you can look to trade this double top. We'll go a conservative and aggressive route again. The conservative way, right, again, entry right here is the high dose stops right above the double top. If you're super aggressive right here, I'd prefer to get beyond this level of structure as well, because I have a feeling a lot of traders would put stops right here, and they're going to get the scare of their lives as they get stopped out, only to see the market run back into direction. So stops above this previous structure high. And if you're super conservative, right, super duper conservative, just look for a retest of these lows right here. You can still get a positive risk reward, as you can see on your deal here. And this is a very, very, very safe spot to exit. A more aggressive way to exit, again, stop loss remains the same. And I'm just throwing these on here randomly, right? You want to do your calculations for your rules, right? If you're new to the channel, we have rules for everything we do. Rules-based trading is what we teach at tier1trading.com. We're just doing it short for this video because I want to keep these as simple as possible, because people get bored and feel like they don't understand stuff and they get intimidated. And I, as a channel for everyone, beginners and experienced traders, I just don't want to scare anybody away. But a more aggressive target would be perhaps right down here at about 91.59, 91.60s. I'm looking at the inside level of structure right here. And then we can have more aggressive ones down here, more aggressive ones down there. I don't really see any reason for price action to go beyond these levels, again, just because of the consolidation on the chart. So I would say one of these 4, 1, 2, 3, 4 would be solid levels of structure to look to take targets at. Speaking of consolidation, another pair that's been in consolidation here is the Pound Aussie. This is another beastly pair as well with a very large ATR. You can see that the price action came up here, we double topped, and then we kind of went sideways for a while before breaking out of this range. And you're looking at yourself saying, hey, Akil, we broke out this range. This is awesome. Well, we did break out and then we came right back down to another previous level of structure. By the way, for you guys studying divergence, right? I know a lot of you guys on the platform are doing so. Look at this descending or falling channel. Look at the divergence on here, right? Beautiful example of bullish divergence on a deceleration pattern that comes right into a previous level of structure. This is a beautiful trading opportunity. And when you can also do that weird little RSI flippy floppy thing that we've spoken about in the past. Anyway, what I'm here to talk about is this, right? So because we've come to previous level of structure already, and we haven't broken and closed below it, there's no reason for me to expect that price is going to continue lower. We also bounced back up to the base of the level that we just broken. So I don't really expect price action to continue higher, right? Again, look left, we're right back in this consolidative range. This is a perfect opportunity to look for consolidative movement. And this means either trading channels, meaning from one extreme to the other extreme, meaning looking for trades as we retest previous structure resistance at the top, looking for trades like this as we retest previous structure support at the bottom, or looking for advanced pattern formations as they tend to act like consolidative patterns. And we have a nice one setting up here in the form of a bat pattern. My starting point is going to be right up here. I'll actually use the pattern tool and we'll look for a bat pattern, right? Swing high to swing low is going to be my X to A. Our move back up here is going to be my A to B. This move down here is going to be my B to C. And our move back up to this 886 is going to be my C to D completion, meaning that we're looking for a short right here. Now, for you guys that listen to the Trading Coach podcast, this would actually be a decent example. I did a podcast called something about fake trading strategies. I'll put the note up in the editing, whatever like that. But it was pretty much about a fake trading strategy that lost a lot of traders a lot of money. And we talked about what it was and how it's not a bad idea. It was just done in a bad way, something called the aggressive C. This would actually be a great example of an aggressive C, right? This happens to be the C leg of a bat pattern, right? But it also happens to come at a level in which you may be looking to take a trade anyway because it's right at that structure level that we spoke about before. However, remember, you're not taking this because it is a C leg of a potential bat pattern. You're taking it because it is a retest of structure that just happens to be at a C leg of a potential bat pattern, and you'd be looking to ride it back up. I would take first targets here, but you can ride it up all the way to the D leg as well. So this is a good example of one that would make sense, but don't do it. Don't do it. I wish I had the camera on. I'm pointing at you. You, the person watching this, do not do it. But anyway, pattern traders, you know how these go, right? Decompletion, the zone is looking from here to the X leg. Gosh, I'm having a hard time today. Got to get used to this, right? Zone is looking from the D leg to the X leg. This is the area where you're looking for shorts. And again, you're only looking for a brief move back down to the 382 or that 618 retracement. Now, not too long ago, I did an awesome interview with the Trading Battle and it just went live and I want you guys to watch it. You guys know I do a lot of interviews. Some of them are, this one was really, really good as we speak about a lot of topics, including my general trading background, why I decided to focus on Forex, kind of different currency pairs and their personalities, my preferred time frames, how long I like to stay in trades, my most actively traded pairs and why, counter trend trading, chart analysis, right? We even actually look at the chart, so it's not just all audio, it's visual as well. The importance of following rules, how athletics helped me in my trading experience, psychological aspects like managing drawdowns, balancing family, trading, like really a handful of awesome topics that I really enjoyed. And I've been waiting for a long time for this to come out so I can share it with you guys, and it is now out. There will be a link in the description box below if you want to check it out. If you do, just give them a like, support it. There aren't that many good interviewers out there, so when you do run across one, just make sure to show them some love. All right?
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, a disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is